Well, thanks for joining us. Let's take a look at our grain market action as it stands right now. And on the corn market, we currently have been seeing some strength develop in the market here today. So let's go to that March contract and see if we're hanging on to where we had some early gains today. We are. We have the March corn still 3 higher at 3.82 3/4. And December is still only a ½ cent higher at 3.92 1/2. So you have that spreading continuing. And I want to pose that question to Brian Hoops of Midwest Market Solutions. He's in Springfield, Missouri. Brian, this spreading activity in the grain side has been going on all day long. Do you have any clue as to why that's been taking place today?
Well, yeah, we're seeing kind of some intermarket spread trade with the old crop corn and soybeans gaining over some of the new crop or even the summer months, even though they're still considered old crop. The front months, March is gaining against some of those deferred contracts. We're getting into the last couple of weeks of the month, and that's typically when commercials will start accumulating products going into first notice day. The funds will typically, again, sell out of their long positions and reposition into a deferred month so they don't take deliveries. And we're seeing that occur today. We're also seeing soybeans gain against the corn market. I think a lot of the bearish news has been dialed into South American production numbers right now. We've seen a slowdown in our soybean exports, and that'll probably still occur as we go into February and into March. But, when you look at longer-term balance sheets, and we'll get new balance sheets in information in the Ag Outlook Forum next week, they actually look a little promising to soybeans, especially compared to corn. And so there's some buying interest coming into the soybean market as a result. Ending stocks, for corn could swell considerably with a normal crop year, where soybean numbers may be kind of stabilizing here unless we get some more acres in play, especially when you factor in the Phase 1 trade agreement and Chinese demand.
Right now, the March soybeans, they've been hovering around a 6-cent gain. Right now, they're up 5 3/4. We're at 8.90 1/2. And the deferred contracts, you go out to September, it's only 3/4 higher right there. Doesn't that seem natural, though, that if everybody thinks China will come into the market later on to be a big buyer as we go deeper in the year, wouldn't that be just the opposite of this, though?
Yeah, and that's why we're seeing the commercials are buying the front months, and they're doing that now, and that's pretty natural for them to be doing that going into first notice day, and that's kind of what is happening here. There's also some talk or some rumors that if they can get the virus under control in China, they're going to need supplies of pork and beef and grain products as well pretty quickly. And so there's a lot of people that are kind of speculating at this point that if they can return to normal, they're going to be pretty aggressive buyers, and that's why we're seeing some of this end user type buying in these front month contracts.
And it makes you think that if they would get to that point to where they need to reestablish all their supplies, you wouldn't think they would want to just feed out the pigs and wait for them to get ready. They'd want to bring everything in at one time and have it ready to go, whether it's soybeans or actual pork. Let's take a look at the wheat market, get you updated there on the Chicago wheat. It has been rebounding today after a sharp sell-off yesterday. And the March contract is 5 1/4 higher. We're at 5.47 1/4. On the Kansas City market today, we have the March contract just a penny higher. We're at 4.69 1/4. Minneapolis wheat on the March contract is actually going the other way. We're down a penny at 5.30. And on the canola market today, we've been watching that too. Interesting here, where with the soybean market trading a little bit higher, we have canola higher as well. March now up $3.10 in Canadian currency. It's priced at 462.50 per metric ton as it stands right now. So solid gains across the canola board. We'll come back in a moment and we'll talk more with Brian Hoops about our livestock trade next. Brian Hoops rejoins us as we take a look at our livestock market action getting toward the end of our trading day here on Wednesday. And on the live cattle board today, we have some higher trade on the nearby contracts. Let's take a look here at the big board. We have the February, which is now in delivery, 20 cents higher, 25 cents higher now at 119.33. But the month with the most volume would be your April contract, I would think, and that's 65 cents higher at 117.83. The June is up 75. But it's a 109.88, and we go back to Brian Hoops. And Brian, the February-June spread, they're about $10.50 apart. No, $9.50 apart. That's quite a difference as you go out to the June contract. Yet you have the February here, as I mentioned, at 119. You have the cash cattle market around 119, but then it drops off quickly after that as you get into the summer months. Maybe you can explain the mechanics of this. It's kind of odd where you have a lower market as you get out in time, even though it looks like the cash market is really selling off right now.
Yeah, you're right. The cash market is down here, and the February board is right in line with that cash, right at 119. Now, the other months are starting to rally. April, June, August, all rallying here, and that is maybe suggesting that they're trying to find some sort of a summer type bottom or a low here on this news. We're discount, like you say, but the market's anticipating 109, 108 trade into the summer, and maybe we're not going to see that. We could see the cash market fall and the futures not have to do anything, and that may be what this market's trying to tell us. It's a little bit of some bear type spreading being led by the June contract, which is not necessarily bullish, but at the same time, it's I think telling us that there may not be a lot of downward pressure for June and August futures below the 110 area.
On the feeders, we're higher across the board, and we have the March up 42. The April contract right now, 55 higher. We're at 137.28. All the months are between about 40 and 70 cents higher here in the feeders. So a fairly strong day for them. Meanwhile, on the lean hogs, they're really floundering. And we have that May contract leading the way down. It is down $1.08 at 72.72. The April is actually only 60 lower. We're at 63.63. So just wanted to point that out. Brian, thank you for all the information today and our look at the markets here from the livestock perspective. Brian Hoops is with Midwest Market Solutions, and he is based in Springfield, Missouri. Janet, I noticed where the Dow Jones Industrial Average hanging right in there. It is up 178 points.
Softened from what you told me earlier this morning, though.
Yeah, around 200 earlier, but hanging right in there.
Thanks, Marlon.
Yep.